Welcome back. You're watching Indian Open. Let's see how the Asian markets are faring at this point of time. Not a bad start, at least from Asia. Most of the Asian markets have done well. Japan especially is up 1%, but the other markets have started slipping. So Shanghai is absolutely flat in trade. Hong Kong has slipped down almost 1%. And the SX Nifty, which was trading with the positive bars of 10 points, have now slipped into the red. It's down 17 points over the past few days. We are seeing a lot of weakness coming in for the market, at least in the last hour of trade. But let's also take a look at the derivative space. Agam Vakil is standing by with what the FNOQs are indicating at this point of time. Agam, is there a lot of call writing coming in at higher levels?
There certainly is, Darshan. And well, today is the weekly options expiry, so we're likely to see turnovers increase. But let's start by taking a look at the futures. We are looking at a decline in OI, and that means that there are a lot of the longs taken earlier have been unwound. Of course, we do have some amount of covering too, which was made earlier. That said, let's also go take a look at the Nifty Bank. And the picture isn't any different here. 3% decline in open interest. The VIX has cooled off just to a certain extent yesterday, but we're likely to see perhaps an up move should we see a little more volatility at the start of the session. Currently at 15.3, the put call ratio at a neutral level of 1.02, so not too much has changed there. But when it comes to changes in open interest, what we saw yesterday was writing around the 10,700 put. But this was largely on account of the fact that Nifty advanced by 0.2%. You never know. With the kind of induced volatility, we could see some amount of writing coming along as far as calls are concerned. Let's also take a look at the stocks which will be in focus today. And of course, this is the 26th September open interest expiry. But to talk about something like a Mindtree or Page Industries, these stocks did advance. They did see longs building up. On the other hand, in terms of unwinding, I'm watching out for stocks such as MCX India, which did see a bout of longs unwinding, and Apollo Hospitals, on the other hand, did see short covering. So it was a mixed day of trade yesterday, but we're going to have to wait and watch for as to how the indices move today, and that should determine how stocks should also show movement today.
Okay, many thanks for that, Agam. Some bit of stocks that we need to watch out for. It's not the most stock-heavy day as far as the news flow is concerned, but yes, we have some stocks that we need to watch out for. Nikki Mirchandani as well as Sameet Sarkar join us. Nikki will talk about all the stocks that are in focus, especially the big Voltas analyst meet that happened. Sameet will speak about a couple of brokerages that came out. Nikki, let's start with the Voltas analyst meet. Surprising that, when everyone is talking about a slowdown, Voltas, in fact, is saying they're not seeing any kind of slowdown.
Yeah, so that's a big positive coming in from the analyst meet, and also they've said that at this point of time, however, having said that, it's going to be difficult to take price hike given the prolonged monsoon, and the Voltec JV is unlikely to have full launch this festive season. So having said that, there are also a slew of things that we need to keep in mind. Reliance Capital, on the other hand, said that no pledged shares of Reliance Nippon have been invoked by any lenders. Borrowings have been covered under the pledge Arnam shares, which are matched by cash. And Himachal Futuristic Communication, that came up with a clarification on exchanges yesterday. It said that it's not created any pledge on any no pledge on any additional shares, and the existing pledge of 3 crores has been extended in favor of ICICI Bank. This was done in order to secure working capital to the tune of around 1,130 odd crore. NIIT, where NIIT's Welfare Trust has sold in 1.8% stake in the counter for a price of around 85 rupees per share. And the other counter, the last one that we like to keep an eye out, would be J. Kumar Infra, where Porunju has increased the stake from 4.8% to more than 5.02%. So these are a bunch of stocks that we'll be keeping an eye out on.
Okay, those are the stocks that we'll definitely watch out. But Sameet, a couple of brokerages also came out. Which are the interesting brokerages you want to talk about?
Well, firstly, on Biocon, Bank of America Merrill Lynch has maintained its buy rating on the stock, but have cut the target price to 310 from 353. Now, they're expecting higher cost on the biological segment of the company, because of which they have cut their earnings estimate, which has led to the cut in the target price. However, they have maintained their buy rating on the stock. stock because of the launch of Herceptin. They're also expecting a ramp up of its another product, that is Neulasta, and they're also expecting the company to address the concerns related to the Malaysian plant and also secure a new product called Lantus. On the back of all these factors, they have maintained their buy rating. Also, they're expecting the company to generate strong free cash flow, and they're also expecting increasing contribution of small molecule business, on the back of all these reasons, they have still maintained their buy rating. The second one is on Havells India, where Jefferies has maintained its buy rating, but they have cut the target price to 790 from 820. Now, they are viewing Havells India as a multi-year growth story, and they're positive on the stock on the back of its varied products, strong market share, new launches, distribution model, no debt on the books, robust free cash flow generation, high cash on its book, and a sturdy return ratios that the company has been generating. But they have cut their EPS estimates to factor in the current demand slowdown and the tight liquidity in the domestic market, which has also led to the cut and target price for Havells India by Jefferies.
Right, Sameet. Thanks very much for that. Moving on then, the US Federal Reserve cut interest rates by 25 basis points for the second time in a row. Policymakers, however, remain divided over the future course of action. To see how the markets are reading into this, let's welcome in JPMorgan's Louis Oganes, who is speaking to us from the sidelines of their India Investor Summit. Thanks very much for taking out the time, Louis. Appreciate it. What have you guys made out of the rate cut? That was an anticipated lines. But the fact that, the future course of action and the outlook, was fairly divided.
Well, this was actually pretty much in line with what we were expecting. We expected a cut, but we expected the language around it not to be too promising in terms of what comes next. A lot of talk about data dependency, etc. We're not expecting the dots to be altered. So in a way, this still falls within what we have in our forecast, which is a cut last night and 2 more cuts in the 2 remaining FOMCs. We think that probably the macro indicators will justify further action by the Fed in the coming months.
Louis, central banks have been, over these last few months, have been making sure that there's enough liquidity in the system. The outlook remains dovish. Obviously, now the commentary changes a bit around. But do you think that on a global scale, all central banks now that they're pushing for liquidity, it's actually not all that bad with regards to even this translating into a meaningful growth number?
Well, the reality is that the macro indicators show that the entire world is decelerating. So the fact that the Fed is cutting rates, and not only the Fed, right? Other G3 central banks are doing so as well, ECB, BOJ, is really providing a window of opportunity for EM central banks to cut rates around the world. This, in principle, should be a welcome development to the extent that in emerging markets, we're not seeing at this stage, again, a recession, and the fact that EM central banks have room to cut, that should at least provide some floor to growth. And let's hope that growth stabilizes and doesn't fall further. But this is something obviously to watch. And monetary policy is the only game in town these days. Very few countries have really space to do something on the fiscal side. So that's why we see it as something positive given the circumstances for EM central banks to have the window to cut because the Fed is cutting.
And that's probably most likely with the RBI as well, as we meet in October and they discuss their rate decisions. But Louis, just coming back to the emerging market pack, at this current point in time, with China opening up its markets to investors, do you feel that this could be a slight bit of a setback for money that was probably set aside for a market like India?
Well, certainly the fact that you're seeing so many, a large share, more than 40% of government bonds around the world trading at negative yields these days, and that share can only increase given that there's more central bank cuts. There is money still coming to EM fixed income markets, EM bond markets. That is why China, in a way, has decided to do things, take steps to have China incorporated into global bond indices, and that secures some steady flow of money coming to their domestic bond markets. I think that in India, obviously, there's been institutional resistance to open the door too much to foreign money, and this is why, even though yields are coming down everywhere around the world, you're still seeing them being quite sticky here in India. Probably this is a good time to reconsider that policy, and to the extent that you want to smooth the path of fiscal adjustment, maybe allowing foreigners to help you finance this transition may not be a bad thing.
What about the equity markets then? I mean, you know, where do you stack India in terms of preference?
Well, we have if you look at our forecast for growth for this fiscal year, we have 6.4%. And given the low results in the first quarter, what we're expecting in general is some modest cyclical rebound in the coming quarters, partly helped by RBI cuts. We are expecting around 25 basis points in October and maybe more to come afterwards. And certainly there's been some measure taken by the authorities that could help at a sectoral level. All this taken together, there's some base effects that should come to help as well. Could see growth numbers a bit better in the coming quarters. That should be supportive of equities, which at the end of the day, as you know, tends to be directly linked to growth dynamics.
So far, I mean, post the Indian budget, foreign institutional investors, have been pulling out money. Do you see that money coming back in a big way anytime soon, or it's going to be more staggered?
Well, I think that the definition of the budget for next year is going to be key. So long as it is, there are elements of that are going to maintain the deficit rather than widen it, or maybe some measures to actually look to tighten it, that will be a positive. My guess, though, is that we will see money coming back in from foreigners, because, again, these rate cuts right and left is generating such a search for yield. Of course, that search for yield is not indiscriminate in the sense that the investors are trying to look at individual country stories to see where they place their money, and you're seeing some differentiation across countries. But so it is then therefore an opportunity for India. As I said before, at this stage, a lot of the debt issuance is basically relying on the domestic market. A very small segment is relying on foreign demand. My sense is that there's probably a lot more money that could come into India if the circumstances were right, and certainly the window for foreigners to come in, was open further.
Mm-hmm. Does oil throw a spanner in the works? Obviously now commentary is more positive. We saw oil cooling off as well, but it really puts out question marks now with Trump ordering more sanctions on Iran. Does the future course of oil now stand to direct what equity markets do, especially for an oil import dependent country like India?
I think it depends on ranges. So the jump that we saw on Monday this week on the back of the sad episodes in Saudi Arabia over the weekend didn't get to levels or didn't cross thresholds that I would say were very detrimental for India and certainly not for global growth. India will have a threshold of $70, give or take, beyond which you start to see a deterioration in current account balances. But we didn't get there. At the aggregate level, we actually have an estimate of somewhere around between $80 and $90 per barrel. That up to that level, it is still growth supportive for the world, because the benefit for the exporters outbalances the hit to importers. Beyond that threshold, beyond that range, however, it becomes to be detrimental to EM growth. We didn't get there. Obviously, if in the end all the announcements from the Saudi authorities do not materialize in terms of production coming back soon, we could see some reaction in markets and oil prices going back up again. But again, it will depend how long this thing lasts and how high prices are reached. If they stay, within, at a global level, within 80, 85, I would say that there is little danger to global growth. If we go beyond that, we should start to see actually a reaction in global equity markets, because that starts to hit global growth.
All right, 80, 85 after oil has been trading around 60s is still a little steep. But moving away from that, Louis, let's talk about the currency market volatility and what the yuan has been doing and how emerging market currencies are tracking that, and what are the risk factors there?
Well, even though the Fed is cutting rates, the reality is that the dollar remains the higher yielding currency within G10, right? So ECB has cut much more, BOJ is on his way to cutting more, and we're seeing other G10 countries, be it in Scandinavia, be it in Australia, New Zealand, cutting rates as well. So the dollar remains, from that perspective, the place to be if you want to have some yield. That is going to conspire in a way against emerging market currencies. So EM central banks are going to be doing, as I said before, their easing as well. So that is going to be undermining some support for interest rate support for their own currencies. So at this stage, what we're expecting for the trade-weighted dollar is to remain rather flat. So all this appreciation that we saw of the dollar since the second quarter of last year, we're not seeing that reversing anytime soon. You mentioned the yuan. The yuan, because of this US-China trade war, the risks are for the yuan to weaken further. Obviously, there are some talks that are coming up in October. Remains to be seen what happens there. I have to say that we are skeptical given the very far apart starting points of these negotiations, that there's a massive breakthrough that reverses the tariffs that were already adopted. But maybe there's some room for some partial agreement that at least prevents more tariffs from being slapped on each other. Our forecast, at least on paper, remains at 735 for dollar yuan for year end. So more weakness from here. This is because obviously we're not penciling in any breakthrough, any partial agreement. So that is something to watch, and that is something to maybe that could help currency markets a little bit. But we need to be patient and wait for October, see what comes out of that.
Crude 80.85, yuan 7.35. It worries me a bit, Louis. But thank you so very much. Points well taken. Appreciate you taking out the time and joining us this morning. All right, that was a quick comment coming in from the sidelines of the JPMorgan investor conference session.
Yeah, let's now get back to our market and focus on some of the technical analysis. Amit Harchekar, director at Index Genius Investment Advisor, joins us on the show. Good morning, Amit. What's the sense that you're getting on the broader markets? Let's talk about the Nifty and the Bank Nifty. What kind of strategies should investors or traders adopt in these two indexes?
Well, good morning to all. See, if you see the consolidation which begin all the way from August, it may construe like it is forming a bottoming zone like an inverted head and shoulder, but the fact is it has formed a diamond consolidation. What it means that diamond consolidation is a complex pattern and where maximum short positions are accumulated. I think the time is right now. We have seen a start of a major decline which is seen in the Nifty. So overall, we are expecting the minimum target of this diamond consolidation in the range of 10,450 to 10,500. And if it extends beyond, I think even 10,000 is quite possible in the very short term. Similar move is for Bank Nifty. If you see from a change of polarity angle, the previous bottom which was seen in Bank Nifty in the month of May, now that is acting as a resistance. All rallies are sold into, and if you see from the Nifty perspective, 11,100 was the intermediate bottom in the May, and that is now acting as a major supply zone. So when there is a change of stance and when market tries to consolidate at the previous bottom, I think that is where long-term selling is expected to come. So we are quite bearish on the market. We think right now the selling will trigger from a lot of long unwinding from the mutual funds. Remember, if you see the last 3 years average price in Nifty mutual funds, I think it's trading at around 10,160. So that is the level below which all mutual fund investors will press panic buy button, and you will see at least slide of 10 to 15% below that. So we believe right now a lot of people are hopeful for a rebound, but I think the moment Nifty starts trading below 10,600, you will see a lot of pressure coming in the markets.
Okay, that's the view that's coming in from Amit. Sameet Chavan, he's the chief analyst for technical and derivatives trade at Angel Broking. He also joined us. Good morning, Sameet. What's the sense? Are you also quite bearish on the market? What's your view on the Nifty and the Bank Nifty?
Hi, morning. See, day before yesterday, we saw a decisive breakdown, from a triangular pattern. Since last 3 to 4 weeks, Nifty has been consolidating within the boundaries of a triangle pattern. Yes, it has broken on a closing basis, but still we believe that, considering the broader market, considering the overall divergence in RSI, we still believe that for a time being 10,600 would act as a support. So as long as this important level is getting defended, we don't want to sound too bearish on the market. If we look at the mid-cap index, due to last week's up move, it has confirmed higher top, higher bottom formation on daily chart for the first time in last many months. So that also encourages us. So at this juncture, we don't want to sound too bearish. On the low side, 10,800, 10,750 would be seen as immediate support, and yesterday we did see muted session. And on the higher side now, if this triangle has to negate, the breakdown of this triangle has to negate, Nifty has to surpass 10,900, 10,950. So we are a bit hopeful. Let's see how it pans out. And once Nifty surpasses 10,900, 950, we could see a sharp short covering move, first towards 11,050 and then towards 11,150. So as of now, one should keep focusing on individual stocks that are providing better opportunities. In the cash segment also, we are seeing good traction in most of the counters.
Sameet, what about stock specific? Let's be stock specific. Which are the stocks that you're recommending for today?
See, first buy would be on GAIL, which has been a laggard since last many months, but considering the overall price development last 3 weeks, it appears that the stock was attempting to form some kind of base around its multi-year support of 120. Yesterday we saw a decisive breakout from its recent condition zone, and hence we expect continuation of this move. So purely with a trading move, stock can be bought for a target of 141, stop loss around 131.5. And as I suggested, that there are a lot of stocks from the broader market that are still providing better trading opportunities. So VIP Indus is the one stock that has been clearly bucking the trend. If you look at the daily chart, we can see high of Harvard formation with yesterday's strong bump up. Stock has broken out from its downward sloping trend line. So we expect continuation of this ongoing momentum in VIP Industries, can be bought for a target of 482. Stop loss can be placed around 432.
Amit, what's your sense? Which are the stocks that you want to speak about today?
Well, I have both sell calls. My first sell call would be going short on IndianOpen Bank. See, if you see IndianOpen Bank from the mid of May, the stock has already breached long-term descending triangle, and we believe the 2 months forward target, it's coming around 950 to 980 zone. So right now, even at these levels, the support for the triangle was placed at around 1355, and right now the prices are trading below the same. So the strategy I would adopt for a very short-term basis would be again opening up short positions at these levels. Stop loss I would maintain at 1385, and we are expecting a short-term target of 1235. I think IndianOpen Bank is showing a major bearish signal even on multi-year charts. So I think it's a golden opportunity to again open short positions here from a positional perspective. Our second pick would be going short on Bajaj Finance. That is through buying 3400 strike put options, which is trading around 50 to 60. Although the stock is highly volatile and having implied volatility of more than 35%, we think put option is the best bet for trading on the short side. In case of Bajaj Finance, our view is the Bajaj Holding, which is the holding company of both Bajaj Auto, Bajaj Finserv and Bajaj Finance, that has already given a major breakdown from the rising wedge, and that is positioned for a 15% decline in the near term. So we believe that would eventually translate into a price target of around 3150 to 3000 on the Bajaj Finance terms on the short term, and on long term basis we are expecting a target of 2800. So we believe this option becomes a good trading opportunity for from a short term perspective. Here the stop loss we are recommending would be 20 rupees on a closing basis, and we are expecting a minimum target of 200.
Okay, so we'll watch out for all those stocks. Time to get in a fundamental view. Siddhartha Khemka, Vice President and Head of Research at Motilal Oswal Financial, joins us on the show. Siddhartha, good morning. Thanks for joining in. What's the sense that you are having currently? What are you recommending your clients in terms of how to play this volatile market?
Yeah, good morning. So things are really volatile here. Not only back home, the concerns have been all around globally. We have seen central banks globally talking about recessionary or a slowdown kind of period, and taking unaccommodative measures to the economy. So we have seen the ECB cutting rates as well as starting the QE from November. We had the US Fed yesterday cutting rates, although they don't look that aggressive in terms of cutting rates in future, but nonetheless, at least they are prepared if the economy requires it. Further, we have the Bank of England and Bank of Japan meeting today. So it's all around. We looking at the current slower economic growth as well as the benign interest rate in the inflation environment. We expect RBI to also follow on its rate cut that it had done previously by at least 40 basis points in the forthcoming the policy that is there. So in this environment, some of those sectors or stocks that we look clearly to play is one is IT, where it plays out as a pure defensive, and second is the FMCG or the consumer sector, which although is currently facing a lot of challenge in terms of volume growth and headwinds in terms of demand, nonetheless is a defensive sector and has continued to get the market interest.
Siddharth, let's talk about individually. Let's talk about autos as such. What should one do in the auto space at this point of time? No doubt the monthly numbers do indicate significant amount of slowdown, but now valuations have also come off significantly for some of the large players. What's the sense? Which stocks do you believe? Are you telling your clients that this is the right time to start accumulating, and these are the stocks that you have to avoid?
Yeah, so if you see the slowdown is continuing in auto month on month, we have seen that at least some of the larger players in the four-wheelers, the decline at least on the month on month has come down sharply. So although we are seeing on a Y&Y decline of 30%, so valuations, as you rightly highlighted, have come off, but they are yet closer to the long period averages if I were to take the entire sector. Even if you take the case of Maruti, on a trailing basis, the valuations were in excess of 30, is now currently at about 24, 25 times. So in that sense, we don't think that the pain is yet over. So someone who is looking from a 3 to 6 month perspective may completely avoid the sector for now. However, people who are looking at a longer term, that is at least 3 to 5 years, for them we are saying that one can start accumulating a high quality stock like a Maruti, where you are getting a good price because of the bad market or the bad environment. We do believe that if the revival comes, Maruti will be in a better place to ride on to the growth. We are anyways factoring in 20% plus growth for next year, that is FY21. This year, there are a lot of challenges apart from the slowdown in demand. There is the expectation of a rate cut from the government, GST rate cut, which is leading to some postponement of demand. And after that, there is some expectation of discounts from the OEMs because of the transition from a BS4 to BS6. So all this is leading to some trouble for this financial year. But as I said, someone looking from a longer term perspective should definitely look at a quality stock like Maruti, where growth should revive. They have the market leadership, the brand, and the products to definitely grow in the longer term.
Okay, let's stick with autos and let's also ask what the technical view is. Amit, what's your sense? Any auto stock that one should buy at this point of time, probably hold in for a month, that could give someone attractive returns?
Well, my sense is stocks like Maruti, Bajaj Auto, I think they have already completed their bear market up move and they are poised for a next leg of decline. So I would not hesitate to go short on Maruti at current levels with a stop loss of 63.50. I'm looking for a target of 5,500 to 5,600. The only stock in the auto we are quite positive is Tata Motors, and that too because we are expecting a GBP that is bound to cross 100 in the coming months. So that should provide a positive cash flow for Tata Motors, and that's why we believe Tata Motors has all potential to hit levels of 165, 170, even in the conditions that market slipping below 10,000 levels. So we are quite positive on Tata Motors on every decline, but as I said, Maruti and Bajaj, I think they becomes a good shorting candidate.
And Sameet, any auto stocks that you find attractive?
In fact, I'll go with Maruti, which has been consolidating and seems like around 5,600 stock spent some time, and in last couple of weeks we have seen good rally in this counter. So the daily chart clearly depicts high top high bottom formation for the first time in last 4 to 5 months. So it's a positive sign, and as long as it holds its recent swing low of 57.50, we remain bullish on Maruti.
Okay. That's a quick take on Maruti. Anything that you're seeing with regards to the OMC pocket, Siddhartha? I mean, we've seen volatile price moves, some cool off coming in, Brent now at around 63. But what does one do with oil marketing companies?
Yeah, so the biggest brunt that one faces in the current challenging environment is that the sharp volatility in crude does impact the oil marketing companies. We had seen how on Friday, where there was some news of stake sale from the government, the stocks had gone up 7-8%, and over the weekend, once the attack on the Saudi plant had happened, they all cracked down. And now again, with the crude oil prices coming off, they have seen some kind of relief. Our expectation that on a longer term, at least in the medium term, the crude oil should stabilize in the $60 to $65 per barrel mark, and that is something that should be comfortable for the oil marketing companies. We expect that the past issue of the subsidy sharing, which had just cropped up before the elections, no one is talking about that right now, and the valuations have become very attractive for some of these oil marketing companies because of the fall. So one definitely needs to be cognizant that the intermittent volatility will continue because of the geopolitical issues. Bearing that, if one is looking again from at least a 1 year plus perspective, some of these oil marketing companies definitely does offer a good valuation to enter from an investment perspective.
All right, gentlemen, just stay on. We've got about 30 seconds left to go for market pre-open. So just quickly looking at what the equity markets across Asia are doing. Japan is up 1%, Shanghai also in the green by 0.1%, but Hong Kong weakening a bit further. SGX Nifty, the cuts have, exaggerated a bit, but I think just a few points, so really not too much. About 0.25% lower for the SGX Nifty as well, 10,833. Indian equities open up. Nifty is got a positive bias at pre-open, closer to 0.8%. The volatility is key in the initial pre-open tick, so we'll wait for these prices to cool off. In the meantime, taking a look at what individual prices on the index are doing and the stock moves thereof, we've got a whole lot of auto companies to focus on, as well as what's been happening with the rest of the IT pack, which looks weak in today's session. So Infosys is your top loser on the index at pre-open. That's down about 2.5%. Hero Motocorp's down 2% too. Axis, Bharti Infratel, UPL are all trading with cuts of closer to 1%. Coal India is down 1/3%. And then you've got Tech Mahindra looking weak as well. What's gaining is Tata Motors. That's up at 125 now. Yes Bank has moved up to 65. IndusInd Bank and Maruti Suzuki at 61.48. HDFC Bank and both HDFC twins are trading with gains of 0.5%. Bajaj Finance, 1/3% higher. For the currency, we are trading slightly weaker this morning. So 71.36 to the dollar is where we are at. What else from the broader
Yeah, so I think I'll watch out for Axis Bank today. That probably will be the big stock that I will watch out for today, given the fact that yesterday it managed to spike up on news of the potential QIP. The Times of India today reports that it's a $1.6 billion QIP that will happen probably over the next 1 or 2 days. So the market boomers are already of a good response to the QIP. So Axis is something that I'll focus on. Inox Wind is up almost 8%, but the volumes are extremely thin at this point of time, just 500 shares traded there. The other counter is Reliance Infra, which has managed to move up on decent volumes, almost 22,000 shares traded. That is up in trade. Apart from it, it's some of these smaller companies which have managed to do, which are gaining. JP Power, DB Realty, Network 18. Tata Communication gains for the second day in a row, but the volumes are extremely thin currently. So these are some of the counters that have moved on the higher side. What is not doing well? Manpasan now coming close to a single digit. It's at 10 rupees. This usual suspects, your Everready, your Jet Airways, your Quality, those counters. Surprisingly, Infosys and Hero Motocorp are showing a downtick currently. So these are some of the stocks that we need to watch out.
I think the bond market yields are also, up for us to see. 6.60. So you've got a dip of about 1/3% coming in for the bond market yields. Siddhartha, Khemka, come to you with regards to, what you're going to do now In the housing finance space, I mean, there's a PTI reports that's suggesting that that the external benchmark rate linking could happen for housing finance companies and NBFCs as well. But this is a bit tricky because they don't operate as banks and they don't have one anchor rate. So, the way around this could be slightly different. But what's your sense?
Yeah, so if you see the entire policy about linking the lending rates to a benchmark, either a repo or something else, even the banks are not very clear in terms of how this will happen. So we were expecting at least some margin hit for the banks to start with. We'll have to definitely work on the NBFCs, how they will take this going forward. One view is that they will keep some buffer in the spreads itself when they start offering the benchmark linked interest rates, to keep the buffer at least in terms of any changes that will happen in the next 3 to 6 months. That should help them. However, the current demand environment is such that there is not much of pricing power with the NBFCs, given the fact that a lot of these banks have become aggressive towards the retail segment, and housing finance is a low-hanging fruit there. So definitely something of this sort will impact margins whenever it gets implemented.
Okay, let's talk about some of the banking stocks. And Sameet, anything on the banking space that you like? What about Axis Bank and ICICI Bank? What's your sense? What should one do there?
No, I think although Axis Bank is trading around its multi-month support, one has to see some kind of follow-up move, some kind of trend reversal pattern on this particular counter. Yes, 640, 638 seems to be a very strong support, but we would rather wait for further developments to happen, probably a breakout beyond 660, 662. So that would augur well for this particular counter. So in case if you have to, go long in Axis Bank, we would wait for a breakout to happen beyond 662. So that would trigger some, initial rally probably towards 685, 700.
Okay, and Amit, what's your sense on Axis Bank?
Well, I believe the stock is already given a long-term breakdown below 675, and we are looking for a target of 550 from a positional perspective. So in case there is pullback towards 655, 660, again we would suggest shorting with a stop loss of 675. And if you see the entire formation from 2 months perspective, it has formed similar to a diamond top on a very long-term basis. So we think this stock is poised for at least 25 to 30% fall in the coming months.
Siddhartha, what's your sense on the telecom space? The monthly data numbers were out. Again, it's Reliance which is gaining the market share. But of late, if you see Bharti, compared to Idea, Bharti has managed to hold out. How would you play the telecom space? Would you recommend your clients buying Bharti Airtel?
Yeah, so telecom, the data is out, and again RGO has registered a healthy subscriber adds. In this space, definitely Bharti Airtel has seen some kind of resilience. There was another interesting point that was highlighted today in a morning meeting where TRAI has floated a consultation paper to revise the implementation date for implementing the bringing the mobile termination charge from current 6 paisa to 0. This is a big U-turn from the TRAI, where they have said that the implementation would be a challenge, given that the migration to 4G has not happened and not everyone is on the same platform. This was a big overhang for the incumbents, especially the Vodafone and Bharti Airtel, where they would have lost a lot of earnings from the mobile termination charge. So this is just a consultation paper. This was to get implemented from Jan 2020, and any delay in that will definitely be a positive for some of these players. We expect a rough cut estimate says that on a quarterly EBITDA basis, Bharti should gain around 4%, while Vodafone it is much higher at almost 20% gain at the EBITDA level if this were to be implemented. Going back to what should a retail investor in this environment do, definitely the telecom space, RGO is being the market leader. One needs to play that only through a Reliance Industries. That would be the preferred pick. followed by a Bharti Airtel, if at all someone were to look at a turnaround kind of story. We also believe that the ARPUs are kind of bottoming out from here. Things should improve. Bharti is looking at cutting a lot of debt, which should also help in the overall valuations. But having said that, this segment has been a wealth destroyer kind of a sector for the retail investors in the last couple of years, and one definitely needs to understand the risk before getting into a sector like telecom, where the migration to now from 4G to 5G will happen, where the capex will again go up. There are the future spectrum auctions, which could again lead to increase in debt for some of these names. So keeping those in mind, one can look at a Reliance as a top pick and followed by a Bharti.
Okay. The other point I want to ask you is, Siddhartha, if you is there a way that you're going to now play the banning of the e-cigarette for Godfrey Phillips, ITC? Both of them spiked up in yesterday's session when the announcement came up. How would you position?
So I'm not sure whether what kind of revenue these e-cigarettes used to have in India, and how much of that ban will bring back growth for the cigarette businesses. Anyways, if you look at the core cigarette business for some of these players, we have ITC under coverage, where the volume growth from a decline had stabilized to a marginal growth kind of a number for last few quarters. The valuations had come down, and if the play on ITC is more on the sharp growth or improvement in the margins of the non-cigarette FMCG business, which if the margins were to improve, will start contributing meaningfully to the overall EBITDA of the business. So that's the pure play. The valuations currently are attractive for ITC, along with a good dividend yield in excess of 3 to 4% in the current price. And we have seen in the last few years, the stock generally bottoms out around 240 to 50 odd levels, which is where some value emerges for the stock. So one can look at more from a contra play rather than a direct play on cigarettes.
All right, we're just minutes away from market open, so it's time now to tell you all that you need to know to stay ahead in trade today. Reliance Jio was the only telecom service provider to add active subscribers in the month of July, while Bharti Airtel lost subscribers for the 9th straight month.
Voltas in an analyst meet says there's no meaningful consumption slowdown in the products business, but it is difficult to take price hike given the prolonged monsoons.
Bank of America Merrill Lynch maintains a buy on Biocon but cuts its target to 310 rupees from 353 rupees per share, expecting higher costs in biologics.
NIIT's Welfare Trust sells 1.8% stake in NIIT Limited at 85 rupees per share in a block deal.
Lastly, Reliance Capital says no pledged shares of Reliance Nippon have been invoked by any lender. Borrowings covered under the pledged RNAM shares are matched by cash.
Okay, just 3 minutes for the markets to go. Siddhartha, among the mid caps, are you finding favor among this mid cap? Any prominent names that you're telling your clients to start accumulating at this point of time?
Yeah, so there are a few segments. As I said initially, we are definitely looking at the FMCG sector. One name that we are recommending to our clients is Marico. The company is a large player in the hair care segment, and while the company is aiming for 8 to 10% volume growth and a top line growth of 13 to 15% over the medium term, we are factoring in a revenue growth of 13% for the next 2 years. Further, we expect the benign raw material environment to continue for the next 12 to 15 months, with copra prices being down, which accounts for a significant almost 40-50% of its raw materials. We expect margins to improve, leading to a 20% plus kind of earnings growth over the next 2 years. So that is one stock in the FMCG space that we believe should do well over the next 12 to 15 months.
Okay, Siddhartha, we'll leave it at that. Many thanks for joining us today morning and sharing your perspective on the markets. But let's get to our technical analyst. Pre-open has almost settled. Amit, apart from the stocks that you've recommended, anything interesting that looks that you can spot on the pre-open side of the market?
Well, I think L&T is the one stock which is looking weak from a positional perspective. If you see the Bharat 22 index, it has already breached multi-year support and it's poised for another 20% fall in the coming months. So we believe L&T is the heavyweight within that, and even Axis Bank. So we would suggest buying a 1320 put option of Larsen & Toubro, which is trading around 16 to 18 rupees. We think this option could be heading towards 80 to 100 rupees in the coming days.
What about you, Sameet? Anything interesting that you've spotted in the pre-open session, and would, apart from the stock that you've already spoken about, anything else?
See, I'll go with one more stock from the broader market. FSL, due to last week's bump up, stock managed to give a decisive breakout on weekly chart. This week we saw a mild profit booking day before yesterday, but yesterday there was a V-shaped recovery seen, a strong buying interest somewhere around 50-50 half. So stock is gearing up for strong move. We believe that stock can head towards 56, 58 over the next 1 or 2 weeks. So risk to reward ratio is quite attractive. One can go long at current level also. 49.70 would be the stop loss level.
Okay, a minute left to go for market opening. So let's quickly get into those top trading ideas from our technical experts. Start off with you, Amit Harchekar, your top call for the day.
Well, I would suggest buying HDFC 1980 put options. We have seen a major decline in HDFC from a long-term perspective. We are expecting a target of 1850, so that put should translate in the price target of 80 to 100 rupees.
Okay, that's coming in. I think 30 seconds left for the markets to open. Sameet, top call for before we start.
I'll go with VIP Industries. A minor dip towards 445 would make it an attractive risk to reward ratio. So go long in VIP Industries, target 482, stop loss 432.
All right, gentlemen, stay on. We'll just come back with the opening thoughts from you. But in the meantime, about 10 seconds left to go for market opening. Pre-open is absolutely flat. There's nothing much in terms of a trend indicator. The direction seems to be mildly positive. But that's what you've got in terms of market open. The Nifty as well as the Sensex open marginally under 13 odd points lower for the Nifty 50. Sensex trades 44 points down. About 1/3% cut for the Bank Nifty, which is trading now at about 27,079. Taking a look at what the mid caps and the broader market space has been doing. Remember, there has been this tinge of outperformance over the last few days. In today's session, flat open for the Nifty mid cap 100. For the small cap index, marginally positive, about 1/10% or so. So that outperformance seems to be carrying forward in today's open at least. Taking a look at the heat map and what individual stocks are doing, more red than green. And you'll start off first with the biggest loser, that's Yes Bank, that's down about 2.5%. Z follows it with about cuts of 1.5% or so. Banks are looking weak. So ICICI Bank, we've lost out closer to 1% there. Some metal names, JSW Steel, Vedanta looking under by almost 1%. And IT as a pocket, TCS, you've got Infosys, Tech Mahindra, all of these names looking slightly edgy in today's trade. What's gaining ground then? Bharti Airtel, that's up about 1.5%. Tata Motors does okay. Sun Pharma, Cipla, Pharma as a pocket is okay. Wipro holds out. HDFC Bank about 1/3%. Both HDFC and HDFC Bank are doing relatively okay for itself. And Titan, that seems to be muted in today's session, but the last few days have been working well for Titan. The stock has gradually started to move higher in trade. A lot of positive brokerage reports also around the counter. But also a few stocks to keep in mind as you set up for trade this morning. So starting off first with some of those housing finance companies, where there is a possibility that the RBI looks at external benchmarking for them too. Don't know how the dynamics of that will work since they don't have one single anchor rate like banks do. Not much of a move for Canfin or Repco in today's session. Other stocks that are trading on the back of some news. You've got Arnam after the clarification. No major cuts, but is still under by 1/4% or so. J. Kumar Infra, you've got Purinju Vilayat. He's increased his stake. His fund has increased his stake in the company. Stocks up 1%. Godfrey Phillips, after seeing that initial uptick in yesterday's session post the ban of e-cigarettes, in today's session is trading under by 1% or so. But what else are you spotting, Darshan?
The big mover today is Vodafone Idea. It's up 15% among the largest mid cap. It's up 15%. So I think the telecom data that came out and the changes in the ICU interconnect usage charges. That is something that benefited. The other one is IDFC, which has managed to move up 2%. The other ones are rather flat in trade. Nalco is another one up 2% from the metal pack, but apart from it, no major moves coming in. The losers list include the regular, your Manpasands, your McLeod, your 8K miles. So that is the trend that we're seeing. So we're not getting in any kind of major trades. PNB Housing Finance is something which is at a 52-week low. That has managed to move up. HDFC has managed, and HDFC Bank, I think, are the only one that are providing some bit of support to the Nifty. But apart from it, there is heavy selling that's seen across the market.
All right, let's quickly get in some closing thoughts from our technical experts before we bring in Chakri Lokapriya. Starting off with you, Amit, what will you be watching out from a range standpoint on the upside and downside now that we've got the open around 10,800?
Well, as I said, Nifty has already confirmed this start of a major decline after a breakdown from a diamond consolidation. So we are expecting a target of near 10,500. And from a stock specific perspective, I think Reliance has also completed long-term head and shoulder top. So right shoulder was completed in the month of August when it hit around 1300 levels. So we believe this entire formation or consolidation in Reliance should translate into a price target somewhere around 1000 to 950. So on a very short term perspective, we are expecting a target of 1120. So would suggest opening short positions with a stop loss of 1250.
Okay. Sameet, your opening thoughts?
See, we would continue with the stock-specific approach. If you see Godrej Consumer Products, it certainly looks good. Stock has been giving decent move in last 4 to 5 days, and today also we are seeing good traction. This counter, the stock is poised for a strong move. 680, 685. These are the next levels to watch out for.
Okay, gentlemen, we leave it at that. Thank you very much for joining us this morning, Sameet Chavan as well as Amit Harchekar. Bringing in Chakri Lokapriya, Managing Director at TCG Asset Management. He's here with us this morning. Chakri, good to have you. We've seen a lot of somewhat positive cues. Now we've seen Fed going ahead and cutting rates further, though there are question marks on the outlook of the future. Saudi Arabia saying production will come back on track faster than anticipated. So crude oil prices on the back of that yesterday also saw some softening. What have you been making in terms of advice to clients and adding more positions now, or probably allotting some to cash as well?
Yeah, all the points that you've raised in terms of, yes, the US, Saudi, and all the OPEC countries have done a phenomenal job in keeping oil prices under check. And so I think the longer term trend is, again, oil trends lower. Second, the Fed has also cut rates, stating that the US economy was doing fine, but they've cut rates to support global growth, which again indicates that, a willingness to acknowledge and help global trade. So against this backdrop, then what is missing in the India piece is domestic growth. The valuations itself are actually okay. Many of the stocks across sectors have bottomed out. Then it's a question of growth, which I think is about 2 or 3 quarters at least away. And so from that perspective, we range trade rather than go up.
You spoke about a lot of sectors and stocks have bottomed out. I don't know if you can name stocks, but yeah, if you can name stocks, very good. But some sectors that you feel that one should start accumulating now.
Yes, if you look at in the financial services sector, whether it's SBI, which is trading very close to its trough valuations, whether if it's even HDFC Bank and HDFC are also trading not too much above where they were in their lowest point. ICICI, Axis. And then in the NBFC space, LIC Housing, Repco Finance are all trading at about 1 times book. So that is in the financial services space. In the case of autos, I think things like the tractor companies, M&M, Escorts, these companies are trading quite close to their bottoms. And there you have some amount of support because tractor sales will come back sooner versus let's say a 2-wheeler or a 4-wheeler sales. So I think these are and industrial space, wherever there is a government focus, things like L&T, infra, Now, those are the names where the government has a huge push, so I'd really continue to focus on that.
Talking about autos, while some of the companies like a Bajaj Auto or Hero Moto, they in certain slowdowns they never corrected because people gave a lot of emphasis that they were cash generating machines, they were debt free companies. But now, do you think that the focus has shifted from the core balance sheet strength that they have to slowing growth, and that is why they are continuing to fall? And do you see more downside to all these counters?
If you look at all the names that you mentioned, two-wheelers and four-wheelers, they are, the volumes-wise, sales have fallen down for the first time in Lord knows, probably 15 years. And so from that perspective, growth has cyclically dramatically slowed down. So would you buy Maruti at 20 times current earnings? I wouldn't. I would stay away.
Okay.
And so it's the same thing with a Bajaj or a Hero Moto. And whenever the growth comes back, it's likely to be in the lower priced end of Maruti and Bajaj, which deserves a lower multiple.
I was having conversations with at the JPMorgan conference, and the view was that probably for the auto space, the month-on-month volume decline could be starting to trough out. But the additional kicker that has to come in to actually revive and to push sales for the auto space has to be some tinkering with GST, which we don't know whether that's going to happen or not.
Yeah, see, I think if you look at direct tax collections have been way lower. Projections for direct tax collections are also way lower. So that kind of ties the government's hands in cutting tax rates further. So now whether they'll do anything with really announcing a scrappage policy, cutting down other associated taxes remains to be seen. And BS4, BS6 has, all these issues have created lots of issues. So I think you need some short-term measures to revive growth, which is unlikely to happen this Diwali, which was largely anticipated.
Yeah. The other thing also is that, we've also heard conversations about how FIIs are pulling money out. But, if you go to see their weightage in the emerging market basket, they're neutral to India. They've not really gone underweight India. They're still holding around 9.2% or so in terms of weightage. But they're not overweight. And that overweight will come in only once, they see what they were promised in terms of growth. So in light of that, will the FII still stay out for some more time?
I think from an FII perspective, growth is very important because currencies of emerging countries, including India, depreciate over time. So if you assume a 3-5% depreciation per year, then the returns have to justify. And those returns come only with growth, which is now being cut. Now, FI 20 and 21 Nifty earnings growth is likely to be cut again. So against that backdrop, I think...
What do you think they'll be?
They'll probably be FI 20, probably be 10-12%, and FI 21, well, depending on various measures, it's likely to come down from about 20 to about 14-15.
Okay, banks today are taking a knock. Yes Bank is down 4%, ICICI is down 2%, IndianOpen is down 2%. Chakri is the everyone used to bet that private sector banks, whatever multiple it is, they are worth accumulating, but that certainly proved wrong, at least for a lot of these banks. What's your sense on private sector banks?
I think all these banks have corrected significantly. All the names, ICICI, Axis, Yes Bank is a separate story. They have their own corporate problems. But outside of that, no, these banks are trading at close to their trough valuations. So if the overall market corrects, indeed, they would also correct with that. But I think they're all closer to their bottom.
Okay, so probably accumulation now could
begin at with the ICICI, Axis, the HDFC Bank, and SBI kind of names.
A lot of talk about infra push and government front-loading infrastructure spending. Would you then consider, the heavy capex industry?
Yeah, L&T, for instance, is still a very inexpensive stock, and so are many of these EPC companies. And, for various reasons, post-election, things haven't picked up government spending as much as one thought they would, which was most likely to do so. And, now that monsoons are out of the way, or rather almost out of the way. And so from that perspective, I think government spending in infra is going to come back fairly strong.
All right. Great to hear from you, Chakri. Thanks so very much for joining us this morning. Really appreciate it.
Thank you.
Thank you.
Thank you.
Okay, on the other side of the break, a conversation with Lupin's managing director Nilesh Gupta on how he plans to transform the business model. That's coming up next. You can't miss it.
Attractive